Man, these are
How much banana bread have you eaten today?
no, just a little packet. It was supposed to be for the kids. I love banana bread.
So you just took their
There's
banana
a specific video I'm thinking of though, which is what I was referencing. I'll have to send it to you later.
Oh, okay. Hey guys, Aaron Cochran, by Tennessee Dirt Team Lead. I am here with our preferred vendor, our preferred lender, Bryan Johnson with Primis Mortgage. Brought Bryan in today because the real estate agents and our problem solvers and everybody else that we have on our team is just a small speck in the whole real estate purchasing and selling game. You don't, I don't know, how do I describe it? You don't go buy real estate with a realtor. You got to have somebody. You got to have a money man. Bryan Johnson, money man. I'm going to update your title on here. Bryan Johnson, money man.
I like
in that
that.
money shirt today.
I like that.
You know, in your Noah boots. Bryan, please introduce yourself. Welcome. Thank you.
Yeah, my name is Bryan Johnson. Excited to be here. I've been working with Aaron and his team for a year or so, but have been in the mortgage world for 7 years. So yeah, I love what I do. Excited to be here again. Excited to talk lending, dive into the real estate market, the current market. There's a lot of good things happening. Lot of things happening.
There's always good things happening in real
Always
estate,
good things happening.
especially in lending.
Yeah, big meeting yesterday. I'm sure we'll unpack that here in a little bit. But yeah, a lot of things happening. A lot of people moving. A lot of people still moving to Middle Tennessee. So yeah, a lot of great things. We've had a really good year as well so far. So
yeah, they a lot of people that come to us, you know, first time home buyers, experienced home purchasers, you know, all the above. I think it's interesting that everybody is just terrified to talk to a lender. And the way that I account that is, you know, I can go out there and do all the fun and pretty stuff. I mean, I'm built for it. But I can go out there and I can show them homes, and anybody on our team or any other agent can go show homes. But realize when they talk to you, you're the yes or the no. Hey, am I going to get funding for this? And if you go, hey, no, you can't get approved for a loan, that just ends that pipe dream for them. So as long as we're out showing homes and they don't have a pre-approval, like, that dream's still alive. So I think that's one reason that a lot of people are terrified to talk to a lender, but they really need to understand it doesn't need to be that way. I've never had a conversation with you or sent you a client that it's just a no. It's always a how. So tell us a little bit about the importance of, you know, getting that early conversations with a lender, and, you know, and how you help navigate clients through that.
Yeah, that's very good. I mean, obviously it's very important to have those conversations as early as possible. I mean, I tell people, look, you may buy a year or two from now. That's totally fine. Let's still have this conversation, because some people may need to tweak the way they budget or the way they spend money, to get themselves better set up to buy a home. But again, like you said, a lot of agents out there, they just want to get them into the house. They want to get them under contract, but they don't understand lending is such a big part of this, and it controls a big part of the buying atmosphere and the buyer sentiment, I guess, when it comes to some of these buyers. If they don't feel that confident, it's probably going to come down to something with lending, whether it's the interest rate or the monthly payment or just questions that they have that are probably not even valid. So again, all the more reason to have those lending conversations sooner rather than later, just to help. And I tell people, I'm like, look, this doesn't have to be this crazy buttoned up process. It's just a conversation. So let's take a deep breath. It's like going, and again, I say all this, but I tell people all the time, it's also like going to the doctor. If you don't let them check your temperature, I mean, we just don't know. We don't know anything. So that's the purpose of just having these conversations early. Let me check your temperature.
What's the bare minimum you need to do to check somebody's temperature to see if you can get them pre-approved?
Yeah, I mean, I can, again, really just their name and address and social, just 5 pieces of data, really, and then that's enough for me to do a soft pull. And again, we do soft pulls. We don't even have to do a hard credit pull. So, you know, all the more reason again to jump in and have that and have that conversation. Because again, it doesn't cost anything. It's not even a hard inquiry, and then we can just take a look under the hood, if you will, and just
Yeah.
see what their credit looks like, and then start to see what their options are. Um, and I'm all about just keeping people positive. And again, I don't just tell people no, because it's never no.
No.
It may be no today, but like it could be a yes a week from now. It could be a week. It
Well,
could
and
be a yes a month from now.
Well, and the
So
nice thing with you being a broker and not working for a specific banking institute, like you don't open savings and loan accounts, savings accounts and stuff like that, right?
mhm.
You're just doing mortgages. So you get up in the morning, you're strictly dealing in the mortgage world, and you have a plethora of packages and that you can offer different clients instead of, the I'll call it the Bank of America of the world, where they offer a certain loan package, and if it's not conforming to their bank, then it doesn't work. Then yeah, it could be a cut and dry yes or no, but you can pull a soft inquiry and go, hey, based upon the tools that you have at your disposal, if we do X, Y, and Z, if you, hey, pay off this credit card that you're paying $300 a month on, and we can approve you for 10 grand more. It could be something as simple as that. So it's about navigating that and helping them achieve their goals. And just because they get a pre-approval too for $400,000 doesn't mean they have to spend all 400,000 of it. That's just a maximum approval, and people just don't understand that. So we need to take the big bad scary wolf scenario out of the lending conversations.
Mhm.
And it's we talk about in our team, and Brian's been on plenty of our team meetings, and we talk about our agents are not we're not salespeople. We're not going to convince you to spend $500,000 on something, on one of the largest purchases you're ever going to make in your life. But we're going to solve problems for you. And all of our agents are problem solvers. They're not salespeople. Versus if you were a car lot, what's the scenario at a car lot? What do they want? What's the number one thing they want you to do, Brian? They want to go take a test drive. They want you to go drive cars. They want you to drive every car on the lot and fall in love with it, right?
Mhm. Yep.
Real estate agents that are problem solvers, are true problem solvers, and not trying to sell you something, want you to have the purchasing power and the tools so that we can negotiate on your behalf. So when you do fall in love with that we can help you purchase it versus falling in love with it and then falling on your face. We don't want to go that direction. So
No. No. Yeah, I do think there's definitely a lot of lenders. There's a lot of people that probably need to redefine fiduciary duty again,
yeah,
and
yeah,
understand what that means. Because some people just really try to just shove people into homes or into situations that aren't the best. And a lot of these people get turned away by other lenders and agents,
yeah.
just because it's not an easy slam dunk. I hate to even say that, but some people need the extra creativity, and I think we brought that to so many different clients that most, I think, other people would have walked away from. And it takes more effort on us, which is totally fine. But there's always solutions there,
Mhm.
and it may take some extra work on the buyers. And as long as everyone does what they need to do, we can get them to the finish
Yeah.
line. But again, we have to do right by the client as well, and really get them to understand, especially on the lending world. There's so many internet lenders that will say, "Hey, I can get you this rate. I can get you 4.5%," and people are like, "I got 4.5%." Well, they don't explain that they're paying $12,000 in points. So that's a bait and switch,
Yeah.
which is frustrating. But a lot of people operate in that way where they just try to shove stuff past people, and I think
That's your car dealership
mhm,
analogy of hey, great, I can sell you this, brand new Mercedes Benz for $300 a month. Oh, but I didn't tell you that it's a 10% interest rate, and you're going to be paying on it for the next 380 months. Yeah.
exactly.
Oh, but they love the interest rate. It's the shiny thing that they're chasing.
Hmm.
And so what are some things that people should be looking at when they're getting a loan estimate? And they should be asking for loan estimate, right, Brian?
Yeah, yeah. Get the loan estimate, but I can issue a loan estimate today, and the interest rate won't be locked because they're not under
Right.
contract. So that's the tricky part, is getting lenders to be truthful behind their interest rates and what the points may be. A lot of times I'll do a screen share or screenshot of our pricing model. Because again, when someone quotes a rate that's par, that's not the only rate. You can buy the rate down, or you can float the rate up and get a lender credit. So a lot of times I'll just do a screenshot and go, look, here's the array of interest rates.
Mhm.
So this person quoted you this, but you're paying points. If I made you pay that amount of points, you could get this rate. But I don't know that you need to. I don't know that paying that amount of points makes sense. Even though yes, your rate is higher to go par. So, anyways, those are some things to look at in the loan estimate, but you may not see points if they're not locked. So, you just need to press the lender and say, okay, this is the rate. This is no points. Like if I were to lock today, and they still could be untruthful, I guess, um, but those are the big kickers, and then just the standard fees and whatnot. But there's so many people that just issue loan estimates that are completely wrong. Property taxes are wrong. Homeowners insurance is wrong, and that's why people get frustrated when they get under contract because a month later they see the actual numbers and they're like, "Well, this is nothing what you sent me before." And I'm like, "Well, yeah, that other lender sent like I this isn't my bank. This is just the property taxes were wrong. The homeowners insurance was wrong, and all that." So um, it's one of those things where, and that's another benefit too to talking to multiple lenders. And I tell people that, like, yes, do your due diligence, have multiple conversations, and then let's compare loan estimates, and I'll help educate you. So I would say, talk to a few people, and then that may add some clarity when you're looking over that.
Well, what I really like about it with you and your team over at Primis Mortgage is when we're doing a pre-approval or we're getting a loan estimate and things like that, that you guys inflate those numbers, meaning you're inflating insurances and you're inflating property taxes and things like that. So you're going off of what it was last time or what it averages in that area, and ultimately the client can shop for a better insurance. They could save. If they save $50 a month on their insurance, then that's $50 a month less that they're going to have on their mortgage. um, and it's same thing with the property taxes. So it's easier to under promise and over deliver, which it's our team really appreciates that you guys do that when you guys are putting together a lending package for us. So it makes a lot of sense. When's the right time to lock a rate? Like, how do you lock a rate, Brian? Like, when does that occur in the process?
Yeah, I mean, you can lock and shop. There's been those types of products where, you can technically lock sometimes before you get under contract. 9 times out of 10, you're gonna lock once you get under contract and you have an address. So I plug the address into the loan application on my end. It triggers TRID. It means it's an official application. I have 3 days to get disclosures out. So, anyways, once you get the application, that's typically when you lock. I'm a little bit more analytical than most, probably. I probably make the process more complicated than it should be. But again, my fiduciary duty, I think, is to get people to understand what the market's doing and where rates are at. Now, I don't claim to be able to time the market perfectly, but certain situations we may decide to float for a week or two, especially if it's a 60-day contract and it's new construction. I may not lock them immediately. We may, depending on what rates are doing, we'll probably float. If it's a 30-day close and pricing doesn't look like it's going to be doing anything different, we'll probably lock immediately. If pricing improves a lot, we'll probably just float down anyways prior to closing and honor that better pricing. So yeah, that's roughly what that looks like.
Yeah, you touch base on the how do we call this, the mortgage rate psychic. Hey, it's, oh, I'm waiting for this, oh, I'm predicting that. All these people that are on the fence, oh, it's, we had a 50 basis point cut, this is going to happen. It doesn't happen necessarily overnight. Oh, next week this is going to happen. It's just going to drastically change. How you've taught me, over the years, that it's incremental, and it's there's never really just a giant just fallout, like, hey, rates are going to drop 3 points today, 3 percentage points. Like, that's just asinine. So you talked about, if somebody was to get in contract on something, they were moving forward on a home, and they think that, 30, 60 days, whatever, while they're in contract. You talked about your float down package. Tell us a little bit about that and how that they can still obtain that if their psychic powers do actually work.
Yeah, typically we'll probably have them locked, and then if pricing improves by quite a bit, so let's say we lock them at 6.5 and rates are at 6.125, there's probably going to be a way to lower their interest rate if pricing has improved that much. So yeah, there's always options and ways can look at that. But yeah, even with my own refinance I did in 2021, I didn't even time it perfectly, and I didn't even time the bottom perfectly. And I'm a loan officer, so the lenders can't even perfectly time this stuff. It's just we'll just do our best with the contract that we have, and then maybe we refinance in the future if pricing continues to come way down. I think there's a lot of rate cuts. They're talking about a lot of rate cuts in 2025. So, if someone locked today, then we'll do our best today, but then maybe we still can lower it next year or whenever. So,
Yeah, you talked about with the contract that we have and working with that. I know you and I have had plenty of conversations, and our team has had conversations with you about it's not necessarily the interest rate that's going to really impact things. It's when our team goes out and we write an offer, Cassandra and I are writing an offer, or anybody else on our team, we're talking directly with you and trying to figure out what's going to benefit the client the best. And it's I hate to use the term cash poor, but some people come in and they just go, "Hey, I don't really have a ton of money down to put on this. I have moving expenses, and I'm on a limited reserves here." The difference between getting a home, let's say it's a $250,000 home, and the difference between getting it for 240,000 versus 250,000 could really impact you like $8 to $10 a month versus us going after closing costs and title expenses and all that type of stuff. Those types of programs are going to just keep that extra money in your pocket. So finance it and let that asset that you're purchasing appreciate. We have so many cash buyers that come to us sometimes, and I go, "Well, why are we going to spend all your cash? That doesn't make a whole lot of sense." Like, if your cash is sitting somewhere and it's actually working for you, let it work and put the minimum amount of money down to let the money man come up with cash for you so that you guys can let the borrowed money work for you.
yeah,
So
I agree. And yeah, I think that summarizes this year. Some
100%.
people would say it's been a tough year. I think it's been a really good year. It's been a great year for buyers because of this type of strategy that hopefully agents and lenders have been applying to all of their offers and buyers. But
Yeah.
we're able to get some seller concessions and do all this. It might look different next year if
Right.
rates get a lot lower and all these buyers get off the fence. We may lose some of that creativity, but the rates will be lower. So I mean, there's different pros and cons. But yeah, that's been the great thing with this year. It's just a lot of strategy and able. We're just deal structure, I guess, is how I would define it from my side of the fence. Is just we get to maybe buy down the rate or maybe do X, Y, Z with
Yeah.
the money that y'all are able to negotiate with the sellers.
Yeah.
So.
It's, that those closing costs, if you only need $9,000 in closing costs and we ask for $13,000 in closing costs, they can use that money for, things like rate buy downs and stuff like that. So, 6125 could turn into, a high fives, which will definitely impact it. So you won't feel you could technically save that $10,000 in interest over the loan instead of just taking it off the loan amount. You're just going to save it long term. So it's just how we structure the loan and tee you up so that you have the tools that you need to work with the client the best of your abilities, and same vice versa. You're teeing us up to help make sure that we have the tools we need to serve them. So it's all a roundabout situation of how we take care of people, and it's the yin and the yang, I guess you could say, of thing. I guess the banana bread of real estate.
Yeah. And
We're the butter for your banana bread.
Right. And I had Eli, one of our past clients.
Yeah.
Eli. He reached out this week just asking about rates because the Fed cut rate, the federal funds rate, and rates are coming down. And he's like, "Man, are they low?" And his rate is still half a percentage point lower than where rates are at today, just because of how creative we got with his deal, and we were able to buy his rate down so far that even with rates as good as they are today, we're still nowhere near where we got him locked at. So
yeah. And we have to be creative, and we have to understand the whole picture and be able to communicate with each other so that he can do those things. I bet he was taken back that his rate is actually that much lower than what they actually are right now.
Right.
So
yep, exactly.
yeah,
So,
he's got a little one on the way, so I can understand why he's looking for savings. He was always that kind of guy. A good guy though.
Yep.
No, that's excellent. So it's there's different loan programs and stuff like that. After this, we're going to have a team meeting with the entire team in the other office, and we're going to talk about USDA and THDA, which is I think is a unique program, and we'll get a whole video set up on that here in the future for you guys. But we have a lot of clients that come to us. They go, "Hey, Aaron, I don't have any money down, but I've got decent credit. Is there's some programs available?" They talk about FHA, but they don't really necessarily understand the layering of things and the other programs that are available to them. So can you do a quick touch base on like USDA and THDA and how those programs are helping some of these people that are just, hey, I got nothing in the bank. What do I do?
Yeah, for sure. And it's funny, there's lenders, multiple lenders have told me that, or have told the agent that I was competing against that you can't do THDA with USDA. So I think a lot of lenders still don't fully understand THDA. So again, THDA is Tennessee's most popular down payment assistance program. You can couple it with all four conforming loan options: conventional, FHA, VA, USDA. Um, so again, USDA is one of the 100% financed loan options. So without THDA, it's already USDA, or rural development, is a great loan program. There's income limits and there's things that apply. Um,
But the
but
income limits are specific to the county. So what we would see in Franklin County versus city of Franklin would be
Mhm.
two night and day income limits, correct?
Yep, and the income limits go up with more people in the household. And the income limits aren't really that low. I mean, it's not hard to get a USDA deal. But again, 100% financing, so no down payment required, and then just your regular closing costs and whatnot. But then if we add THGA to it, there's a few options with THGA. You can get 5% of the purchase price in money. So that would more than cover closing costs and maybe add to a down payment that you don't even need to begin with. Or you can do the THDA option of $6,000 flat. So this is a program we've used for 5, 6, 7 buyers over the past year,
Oh,
and
at
these are the
least.
ones where they would put $500 earnest money on the front end.
Mhm.
We would do USDA, THDA, and then they would get to the closing table, and everything was covered because of that, and they would get their earnest money back. So they would actually get paid $500
Yeah.
to get the house.
The very first client, you've been with us since the beginning. You jumped on board with Cassandra and I right out of the gate. And the very first home that we closed was in Murfreesboro. And I remember it like it was yesterday. And, we ended up doing a USDA loan with a THDA um, package on it as well. And the people, they were in their 50s. They've lived in multiple states. They've never owned a home. They never thought they could own a home. And we worked through it. I think they put $300 in earnest money down. Granted, they paid for their inspections and things like that, but when we hit the closing table, like they couldn't believe that they made it there because they didn't have the reserves. They just had issues saving up that money because they were in that perpetual cycle of renting their entire lives. So, I remember that closing. They cried at closing, and we handed them a check back for their $300 in earnest money because it wasn't needed to close the transaction.
Yeah, so it's a
So,
powerful duo. So yeah, I'm excited for today's class to run through how the power of pairing THDA with USDA. It's a great option. THDA is fantastic. They set the interest rate today. I think they have it set at 6.125 or 6.25.
yeah.
But their interest rates are always, I would argue, slightly better than the going market. So it's not like one of those programs where they give you money, but then the interest rate's 10%.
Right.
It's just a great program. So
Yeah, no, it's if you're ever working with an agent, if you're ever working at an agent and they don't understand basic lending packages and to at least be able to answer the basic knowledge, you need to run. And if it's somebody on my team, you need to let me know because we instill that information in every one of our agents because it helps solve problems. And if you're not a joined at the hip, you know, literally and figuratively, um, with a lender, then you don't have that cohesive communication. I hate working with lenders that don't communicate. I can't say that you have the right to use whatever lender you want to, but Brian's just our preferred lender in house because we work so well together and he has so many options to help navigate for our clients. But if you don't have that synergy, um, then you're really in for a rough road. Even as agents talking with other agents, if we're not communicating well, the other agent's not communicating well with us, whatever, we're not jiving, it's going to be a rough road. So we want to make sure that everybody's executing, everybody's professionals, and everybody has every tool in their arsenal to go to battle for you. Um, so just make sure when you're interviewing agents that you're talking to them about their knowledge of things that are within the real estate world, but maybe outside of their wheelhouse, and just test them and see what they have, and who's their preferred lender. So interview them as a package. And Bryan spoke about rates and things like that today, off and on. And granted, all those rates that we went over with today, and those loan packages like THDA and things like that, those are based upon today's dates, of course, and they could change at any point in time. But Bryan's got some links that you can find through our website under mortgage lenders, and you'll see Bryan's big old photo popped up there and all of his links, and you can schedule a quick one-on-one conversation with him. He does great at texting and things like that, and it's non-committal. It's just it's not a sales tactic. And like I tell people, Bryan, when I send him over to you, is I go, it's just a conversation. Go have a conversation with him. He's going to be informative and let you have the tools that you need that you didn't have yesterday to make a decision that you want to make. So just because I can get approved for a home loan, if I don't want the monthly payment, maybe that's the deciding factor. So don't focus on that mortgage rate. The mortgage rate's going to change. Mortgage rates, you told me, Bryan, change what, throughout the day, not just daily?
Right. Yeah. They'll reprice. Yeah. 2, 3, 4, 5 times a day sometimes.
So if you were to give somebody advice that's either, give me a bit of advice that you would give a first-time home buyer. Hey, I know nothing about the mortgage world and in buying a home. And give me some advice that you would share with somebody that has purchased multiple properties and things like that over their life. Let's say they're moving into retirement, things like that. Hey, I'm going to move to my last house. But how would you speak to those people, and what advice would you give them?
In terms of like stepping into another purchase,
Yeah.
Yeah, again, I would just hopefully at that point, if they've purchased multiple times, I mean, I just think you have to have a team. I think you have to have a team in your life, whether it's an accountant, financial advisor, and I think an agent and a lender are the same. I think you have to approach life, as if you have that team in your corner at all times. Um, and I would say just continue to have conversations with the lender, with the agent, just to better understand your situation, where you're at, where guidelines are at, what has changed, what hasn't changed. Like if you want to buy a second home or an investment property, or a reverse mortgage if you're going into retirement, or
Mm-hmm.
just all the different things. I would say just continue to have conversations. If you don't have a good team built up around you, build those up. We'd love to be
Yeah.
plugged in if we could be. And I just think
What's
it's
the
important.
importance, Bryan, of staying in contact with the lender after the fact? We've heard the term marry the home, date the rate.
Right. Right. Yeah, I just think it's important to, again, I think that's my financial advisor side of myself. Yeah, I think it's important to stay in touch. Number one, where are interest rates? Are they low enough to refinance? I run scenarios all the time to show people, okay, if we did it today, I mean, I've got one in the hopper that I think he's going to save $720 a month.
That's huge.
But even if you don't refinance, just to have someone like myself step in, review their mortgage, and just review everything, and just let them know what the market's doing, where it's at. I just think that peace of mind is important to me. I think it's important to a lot of folks
Yeah.
out there. Um, and then
And
questions with like, monthly payments and all that.
well, just because you're saving $750 a month doesn't mean that you have to just not spend that $750 a month. You can just continue making the original payment and
Mhm.
pay that house off even quicker.
Yeah, and that's a scenario that I'll run where I'll go, look, if you're okay with your current monthly payment, I'm gonna do this then. Let's do current situation, and then if we refinance, but we add $700 going to principal now,
Mhm.
additional going to principal to match your current monthly payment, and your payoff or your freedom point is what some people call it.
Yeah.
When your house is paid off, you may carve off 7, 8, 9 years because of that. So that's where I get creative and just run. I just love math because I just let the math speak for itself. And it's like, look, you could save that money and do something with it. But it'd be ideal to either invest it or put it back in the house. And if you do that, this is how it impacts you for the better.
Right.
So yeah, those are some of the conversations that are really cool to have and some cool visuals to look at as well.
Yeah. No, that's awesome. Well, Brian, we greatly appreciate having you here today, and hopefully, we've given you guys a little bit of knowledge, and taking the big bad scary wolf scenario out of lending. The whole point of this video series, with the Buy Tennessee Dirt team and our lenders and our preferred vendors and all that type of stuff, is just to give you a glimpse into personality, let you know who you're going to talk to on the other side of the phone or when you meet them in person, and who has your best interest at heart. And if we're not the jive for you, at least hopefully maybe we gave you some information that'll help you make an educated decision in the future. And the worst thing, it's I don't mind if somebody uses a competitor. It happens. There's enough work in this world for everybody. But when you work with somebody that doesn't have your best interest, and sometimes they're just incompetent, um, it drives me nuts, and I want to step in, and I know it's not my place, but that's why we're trying to give you guys a little insight and give you guys the tools that you guys need to, you know, buy your next home or refinance your next home or sell your new home, whatever you guys want to do. So, Brian, thank you again for being on today, and don't hesitate to reach out to them, guys. Thanks, Brian.
Yeah, thank you.
Yeah.